Good afternoon, wherever you are. Welcome again. Today, I'm going to talk about interest rate. Thank God, Bank of Canada have decided to lower the rate a few days ago. They have reduced the overnight rate by 25 basic points. It's now 2.50. That is a great news for everybody. Whether you're currently in a home right now, or you're looking to buy a house, or even looking to shop around and buy a car, or looking for a line of credit, all those things have been affected by rates. So even the US decreased their rate for the first time in over a year. So that is also a wonderful news for those consumers there as well. But in Canada, last year we've been reducing, then they put a hold on it for the last 6 months or more. But now they have resumed cutting it down because inflation have come down quite a bit and people are losing jobs. So that means the economy is tightening up very much. So they have to reduce the rate to kind of jig the economy going again. Before I continue, by the way, let me let you know, you have to subscribe, you have to hit notification so that you get notified when I drop the next video. And also share with your friends and family so that they can get it as well. You don't want to keep the good news for yourself, you want to share it with friends and family. You are getting it for free, share it for free. It doesn't take much, seconds. All you have to do, press it, share it, and it's gone. So thank you very much for coming. In this video, I'm going to break down the terms, what you call overnight rate and what you call prime rate. And also, how does it affect you and I, the consumers and the banks and everybody involved in it. The overnight rate, you have heard the terms before. Banks use it a lot. The central banks use it a lot. Bank of Canada. That country, they call it central bank. So it's one and the same. So don't get confused when I say central bank or Bank of Canada, they are one and the same. Overnight rate are the rate the Bank of Canada set for banks to lend between themselves. Okay? They lend between themselves. That is the rate the Bank of Canada set for them. And that rate is called the overnight rate. They can decide to use it to control the economy activities and policies in the economy. So now, let's say, for example, how do they use it to control the economy? The inflation is very high, and they want to bring the inflation down. They will increase the overnight lending rate. That will take money out of circulation. Inflation is just too much money in circulation. You will not squeeze the money out of the circulation. Remember during the COVID, when the government were dumping money left and right and everybody was staying home, they were giving out money. Guess what? It created a lot of inflation. As a result, the bank increased the rate dramatically. It went all the way to 7% just to squeeze the economy, to take the money out of circulation. And that works, It works too well. I can tell you that right now. That is the one main reason that they set this overnight rate to control the system. So right now, as you know, the economy is being in a funky space right now. Inflation is very little. Actually, it's less than 2% now, from 7% to less than 2%, which is good. And people are losing jobs. So they now need to bring money. They need to boost the system. They need to get the economy going again. So now they started reducing the overnight rate, which in turn also affects the consumer rate. And the other terms I want to talk about is the prime rate. You have also heard about prime rate. What is prime rate? Is the bank that set the prime rate. based on the rate at which they lend to consumers, individuals like me, like you. If you go to the bank, you want a mortgage, it's going to be based on prime rate. It's a kind of a leveler, like that's where they start from, by the way. Everything is based on that. You got a variable rate with what the A banks, like the CIBC, ROBC, and BMO, those banks, they based it on prime. If you're going for variable, prime minus something. It can be prime minus 50, prime minus 70, prime minus 65. Whatever it is, you get. And that is based on your credit worthiness. And based on the risk they are taking, that will determine amount of prime they're taking off. Or based on, is it principal resident or is it an investment property? Is it commercial or not? So all those things affect what the bank is going to give you in terms of minus whatever the prime is. So for example, right now the prime is 4.70. So if they give you prime minus 50, that means 4.70 minus 0.50, your effective rate that is going to affect your loan is going to be 4.20. So that is it's very important for you to know what you're getting from your bank. What prime, you can negotiate that too with them. Is it prime minus 10, prime minus 20 basis point, prime minus 50 basis point? There are some even offering prime minus 1. That means if the prime is 4.070, now you are getting 3.70. So it's very crucial. Try and keep your credit good because they look at your credit a lot. They look at the risk, how much riskier for them to do business with you. So that is going to be based on your interest rate. So it's very important. To just quickly recap it, the overnight lending rate is the rate at which banks lend to each other. Bank of Canada control that rate. Bank of Canada control that rate. Very crucial.